Hello. Today is December the 16th, 2022. Trading and investing of any kind carries risk. Everything discussed here is for entertainment purposes only and not to be taken as financial advice. Because I don't give advice. So, first and foremost, like, subscribe, notification bell if you like to hear my words constantly in your face. And then, share and all that fun stuff. So, interesting quad widging day, huh? What do we get? And we got a push to complete this, pre-market pattern. And then we got a pull. Basically what we'd talked about yesterday was, where is it? Well, let's zoom out. Let's zoom out to the 50. Okay, these charts are full of stuff because I was using them today. Sometimes I bounce around. So we drew out all these crazy lines. And so yesterday, I'd mentioned, we'd kind of found support up here. I was really hoping that either through the night or sometime this morning, we would pull down to this line here, which was this broadening, the bottom of this. I say bottom. It was kind of the first area of this broadening pattern. And so, there is another one here that hits this bottom wick, which will take us down, roughly to 372 or so, give or take. Next week, that would probably be, I don't know, maybe closer to 370 because we tend to pull through them and kind of push back into them a little bit, right? So, and yeah, we did. So last night we pulled down, we tapped this line, the world was good. So we got here, we made it here. So what does that mean? Well, that means that in reality, if we wanted to stay within this broadening pattern, we have a couple of options. We could pull down to this area, which is the lower, line that I've drawn on it, or, we can turn around and start making our way back up to the top of the broadening pattern here. And so, we have signals in both directions. But it's very interesting. I wouldn't be sad if we turned around and started to push. I also wouldn't be sad if we pulled though. So, I don't really have a bias at this point. Sometimes I sometimes I will form a bias and kind of say, okay, my preference is down or my preference is up. But I don't really have a preference. If I were to have to pick one, I would say I'd rather pull down to here. If we could get that pull, take us down a bit further, it would give me a lot more confidence that, we could tap this down here and actually turn around and start pushing into the top of this broadening again. And then maybe at worst, if we were to actually get a nice solid push, we would bump back into this upper trend line again, get rejection, and then, turn around and come back down. Ultimately, that's how I start thinking into the future. So let's look more at today because, this is, it's exactly it was exactly what I was really looking for. So it doesn't always work that perfectly, but, today I'm not sad about it. So I left a bunch of this stuff on the charts. I've deleted probably 50% of the stuff that I drew today. But just to kind of show you how ridiculous my charts can get. And this is just one tab. And I've got multiple tabs with a bunch of other craziness on them too. So, yeah. Fun times, huh? Like when I mentioned that I draw trend lines, like I draw them all day long. I guess I didn't delete these. I guess I must have jumped off of this chart. That's funny. So there you go. Like I do actually draw these just to kind of see, especially in these choppy areas, just to kind of see, if we're going to start turning around, if we're going to start pulling back down. Because like I said, what I like to see is a typical trending, a trending line. So if you were to take a 90-degree object, like a, T-square, is it a T-square? Yeah, anyway, whatever you measure 90 degrees with, square and compass, whatever. And then you were to kind of think about like, roughly like 40 degrees or so. Like that for me is kind of the typical idea of what I look for a trend. anything above that, not anything, I would say anything that's a bit, it starts to look a bit more extreme. That's when I kind of start to draw those lines. You could see the differences, right? And I typically do it in threes because you'll go to one extreme and then you'll go to a more upright extreme. And that more upright extreme, typically, unless there is an insane catalyst of some sort, it's not really going to keep going to that extreme. So it starts to, kind of pull back, and then it'll bounce maybe off the next one, and then it'll pull back, and it'll start to create a new area for a trend line, right? It'll bounce. And when it does, typically there are other reasons it bounces. And you'll have to figure that out. Is it a fib retracement, whatever it is? But for the sake of this, like you see it turn around and bounce, well, you draw the next line. Okay. Then when we break that line, look what happens. We pull. Right. And then try to push. Can't even make it back. We can't even break this previous high, right? We keep bumping into all of this pressure. And then we turn around and we pull. And we try to build a pattern and we try to go. Then we can't even break past these areas, right? These areas of resistance we can't even get past. And so then we continue to pull back and we try again and we continue to try. Well, the more you fail, the more likely you are to pull back, right? And then what happens here, around 1250 every day, of course, you get the crazy end of day volatility. So that's kind of what happened here. We pulled and we pushed back up, pulled back into the close, and then we ended the day right around VWAP, right? So yeah, fun times. Let's jump over to this chart. So we pulled today. We pushed, completed this pattern. All right, we got this pattern, and then we pulled. And so I had this trend line here. Probably could have drawn it differently, but from basically, pre-market low to this wick at the open, right? And then we kind of hovered around in here, but then we got back down. We pulled below this bottom trend line that we have, or say this bottom line that we got to today, which is that's going to confuse everybody probably, but that upper trend line of the lower area of the broadening that I was talking about, we pulled through earlier. And then what we started to see is a lot of chop in here, right? A lot of buying and selling. So this is an area of money, right? This is an accumulation area of some sort. And then we pull below. We try to push back through. We can't get back into this area. So what do we have to do? We have to go back down here a little bit lower, find some more buyers, right? To instill some confidence and get a little bit of a push, get a pullback, start building a pattern. We push, we get to it again, get this wick. Can't really get back into that area. Get sold into, right? So then we pull back down. I mean, this is where the buying began, right? We got it back into this zone. We got back into this area, and then we pushed up. And we pushed up roughly to a 61.8 retrace of the day, which is, it's not the worst thing in the world, right? And if you play it that way, then it's a pretty good day. So let's zoom in and look at some other things that we might see here. So trend lines. I tend to talk a lot about trend lines. I don't only trade with trend lines, but when I was a newer trader, when I was a person that started doing this, one of the biggest problems I had, like I knew what a trend line was. I knew, support and resistance, but, I had no idea of what, like confirmation around what that was. Was I doing it right? You could find random things, but, I could never really find anybody that was willing to kind of put themselves out there and just start, make their chart this ugly and show it. So, and a lot of these trend lines, I went back up from a couple of days ago. See? And just drew from yesterday, from the day before, and from yesterday. I drew these two trend lines because what it seemed like we were doing today is kind of dribbling in between the two. We kind of were. And so because of that, I just left them because it gave me an idea. It gave me another area of kind of confirmation, right? And so Yeah, I mean, trend lines can help you a lot. Now, when you bounce in an area or you start, bouncing around in an area, there are other reasons, right? And that's the whole idea here is to get multiple levels of confirmation, which makes a strong or a weak support and resistance area. So if you only have a trend line and nothing else, it's not the strongest point of resistance. So there's probably more likely that when you get to it, you're going to get a pop through it, right? If you have a lot of resistance. So if you look here, this is that trend line I drew earlier today. See that? And this end of day push we got, look where we stopped. I left it as I tend to. Sometimes I'll hide them, but I left it and I did. Look where we stopped. Well, there was also a line of support and resistance here. The 61.8 retrace was there. There were a cluster of other fib levels in here. Like there were all these things that just came into this area. So when we got up here, I did not catch this push. But when we got here and I started watching this form, I just shorted it. I got in the short there. And, and I managed the trade. So if we would have, my stop loss was basically right up here. So I never put my stop loss in these areas because everybody else seems to do that. And if you do that, you'll be part of a stop loss hunt, right? The algos or whoever, they'll go up there and eat those stop losses and take them from you. And then they'll make that move down. So I don't put them that close. I tend to move them up a little higher. And a lot of times, especially if I get in that far at the top, I won't even use a stop loss necessarily. I'll use, just my hotkeys to get out of it if it pops. Because it depends on how it pops, whether I get out of it or not, especially a trade like that where there's a lot of places where I'm starting to see, this is probably going to reverse. And so I wasn't 100% certain. I was pretty certain. But it was one where I was definitely, I was staring at it eyes wide, that if it popped above the certain level, then I was going to exit. And so I managed the trade roughly to this area. And then because we were getting to that 1250 area, this was around 1248 or so, right? 1248, 1249. Yeah. Yeah, so I cut it right before 1250. And I did that because I don't like being part of that last 10-minute chop. And then we got back up here. And then I started to see this pull. And then, I shorted it again. And I'm not a huge fan of trading, the end of the day like that, just because there's a lot of volatility. So you have to be really careful. And those trades for me are more 50-50 trades because it's just market on close stuff, right? So people are just trying to get things closed and, it gets really crazy and volatile. So anyway, enough rambling about that. So this is why, trend lines can be important, right? It helps with areas of confirmation. And we could go back and just start drawing trend lines as I was doing the other day. So if we were to draw a trend line here, we started to get this trend, this upward trend. Right? We push. So let's just say, you were, today was more of a short bias until this curl at the end of the day. So you're in more of a, hey, I'm going to short this mindset. Or let's just say you wanted to scalp both directions, right? So what do? Well, you just look at this trend line, right? We get this pop through this particular trend line here. And if we were to go out to a 5-minute chart, that's probably just going to be a wick. I could be wrong. Let's see. Let us see. I don't know what time that was. There we go. Yeah, look at that. It's just a wick picking up here, right? Right into this this bigger trend line, right? For this broadening pattern. So, yeah, both of those things, seeing that basically says, okay, I'm going to take a short here. If you're just going to do some scalping, because today was a chop day. It was pretty slow. Outside of the initial pull that we had, we did have some pulls, but you had to be really patient because, it was just this nasty chop, 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 chop. Just what it is. And these days, if you miss those first plays, you're probably kicking yourself in the butt, and that's okay. But you'll live to trade another day. Like that, it's not over. So anyway, back to what we were saying. I'll get to more psychology in a minute. So we get this push, that wick there. We pull back down below, and then we break this trend. And look what happens. We break the trend. Whoop, we get this, right? We try to find support here. No bueno. We basically get a little mini. This is a 1 minute chart, right? So we get a little mini tweezer top here. And then we pull down. We try to save it. We can't. Keep moving down. So, you get in that trade. Get down here. You start to see this wick, which says, hey, that bigger wick there, you're trying to find it at a support area, right? So you're like, okay, I think I'm going to take half there. Then this is just scalping, right? Get this pop, get back up to your entry, cut it. If not, just kind of sit in it and ride it out and remember, this is not advice. This is opinion. This is how I would typically try to scalp. Now, I also I quickly draw Fibonacci and all that too. But when I first started trading, like this is how I was trying to figure all of this stuff out. So, and there's a lot of strategy that I use that I'm not going to share because it's taken me a long time to figure a lot of this stuff out. But the basics of building your own, your own foundation of the basics of trading, support, resistance, trend lines, look at where shares are being bought and sold the most, because that's kind of your supply and demand zones, and it's just because it's a supply and demand zone doesn't mean you can't pull below it, right? It does not mean that. You're down here, you're accumulating shares. So anyway, we pull below and then you continue down. And then from there, look at this. I ended up drawing this other trend line against this. Missed it a little bit, but I ended up drawing it here. So we still pull, we start to turn around, right? Do we want to cut it there? Maybe not. Do we want to take some more off the table? Maybe half of what you got left. Take some more of that. Turns around, gets back up here, get a little bit scared, cut it. If it starts to look like it's going to push. But right here, it mostly kind of tweezer topped again and it pulled back down and started, but eventually it did push, right? We tried to get back in this zone again. So it's a pretty basic way to trade, but it's functional and it works, right? It doesn't always work, but on days like today, it can. Let's see. Let's look at something else. Let's say you wanted to trade against the trend, which is most people tend to trade against the trend, especially when they're starting, right? Because they've got this mentality that, oh, it's pulled so much, it's got to turn around and come back, right? So you tend to trade against the trend. So how would you do that? Well, if you look, it's a lot harder to do that on days like today because you get, this here, right? Well, you're not really going to pop above that. Or let's say you did use that trend line and you popped above it. Wow. Yeah. English, my wife says, is my second language. So, we hit this trend line, we get through it, and look what happens. We're going to lose on that trade. Right? So you're on a day like today, unless there's a crazy catalyst that makes you pop, like you're better off trading with the trend of the day. And, look at, you were to try to get in this particular here. Like let's draw this extreme here. Right? So draw that. You pop through that, and let's say you take that trade. Now you've lost again. Right? Let's say you drew it here. Take that trade. Oh, look at that. You did all right. Oh, then you're going to pull back down and you're going to be below your entry again. And then it's going to turn around and it's going to do exactly what you. This is one of those days where it'll just chop you up and it'll beat you down. And then you'll hate yourself. And then you'll just want to tell yourself how stupid you are and how dumb you are. And like these are the days that kill people's confidence. And it's specifically because people tend to trade against the trend. And on days like today, if you remove that mindset and do something basic like this, your chances of being a bit more successful, because the pulls are going to be, they're going to pull on a day like today, they're going to pull quicker typically than what you're going to see like pops, and they're going to pull a little bit further down. Not always, but in my experience, a majority of the time you'll be more successful in that than the opposite side. Well, this video is way longer than I wanted it to be. But anyway, it's Friday, so what else do I have to do? So, and we could keep doing this, right? We could keep drawing these trend lines. We could do it all day long. Look, trend line. Pow, pull through it, pull down, right? This right here tells me we're hitting this little line here that I've drawn, and it's getting close to it. Tells me, hey, I should probably start at least taking half, right? Takes half. Now I've made, half of what I've got here. It pushes back up, gets to my entry. I cut it. I made half. Better than zero, right? And, and that's a lot of times how I will trade. Again, I would draw different fib levels and stuff, but, that's how I would do it. I mean, I could go on and talk about this all day. So now what do we get? We start to see, this is how you kind of start spotting the curl, right? So we come down here, we hit this little trend line here, we push up. So what we're getting is we're getting a higher, so we have a high, we have a low, right? Then we have a lower high, and we have a lower low. We have a lower high, and then we have a lower low. Then we have a lower high, and then we have a higher high. So this is where you start to look and say, oh, okay, we've got this lower high, but we have a higher low. And then we push up and we get a higher high and a higher low. And then we get a higher high and a higher low. Now, have we broken this higher high? No. But this is where you start to look for, trades and staying in trades, right? And I'm going to assume there is something here that was, that caused this. Might have just been money, right? But it was a bit of a, not a crazy volume day. So then we get up here. So we draw, if we were to draw this trend line here between these two, look at that. Oh, that's partly what helped us here, right? We popped through this area. So I would assume if I were to move that to here, I were to move this to here. Yeah, so we get wicks in there. But either way, that's just, you don't have to worry about that. Just, we'll just call it this. So we pop through here, which means, okay, now we got enough volume now to where we don't have a higher high, but we started to retest this area. And that's very important because what comes next is either going to be a lower low or it's going to be a higher low. Well, we pushed to retest, came back, and we got a higher low. That's very important, right? So now we've got what could look like, if you were to zoom out a bit, we'll do that in a minute, but what could look like an inverse head and shoulders or reverse head and shoulders. So yeah, here we are, right? So we've got this. I mean, there are other patterns that this could resemble, but for the sake of basics, let's just say that. So we get here, we get this pop, and we get this push. Now we're back in this zone. We retest the high of this zone, the higher area of this zone. We pull back to the lower area of this zone, which just happens to be this big trend line for the I'm so tired. For the the big pattern I was talking about earlier. Anyway, I feel like an idiot right now. But you know what? I am an idiot right now, so we'll just take that. So yeah, like this trend line we've been kind of dancing around all day, right? Pulling below and trying to get back through for the broadening pattern. So, we push through, we get to the high, we come back and we use it as support. It supports us. We pull through it a little bit, but again, this is an area, right? It's not a line in the sand, it's an area. Just like here, right? It's an area. So we pull back through, we find support, and we start to move up. And now what do we get? Higher high, higher low, higher high, higher low, higher high, higher low. And that's really what it amounts to. The basics of trading, like that's kind of what it amounts to. And then you get in this area here, you start getting resistance, right? You start tightening up a bit. So you're trying to figure out, this is trying to push further, but it can't, right? You're getting these wicks on up and the bottom. So it's basically bulls versus bears right now. And then there's a lot of things in this area that are really causing this to kind of bounce around. And then what do we start getting? Get a retest of this lower area. Pull just below it. Not the best sign, but we got this wick here. So the real body itself came back to line up with this real body. Not out of it yet. We get this push, but we get this big gnarly wick, right? And then we get this real body of this candle that pulls down. And then what do we start seeing after that? We start seeing, the body of this candle. I'm going to zoom in and show this because this is an important thing with candles. The body of this candle, it opens inside of here, but it's really close to the low. And then it closes here. And this body of this candle opens at the low of the previous candle. That's important. Very important. When that starts to happen, that's when you start to see actual moves. That's what the candles are doing right there. And then you stay in that move, and then you get this turn around here where you start to kind of push back into this big red candle here. You get this push, you get this push, and this is what you start to get to try to retest the top of this candle. Get to the top of it. What happened? Didn't break it, right? The body broke it. The body broke the body, but you just couldn't stay above that wick. So we get this, this hammer up here, and we turn around and we pull again, right? So understanding these things is very important for trading. Now, these aren't the only things you need to know, but for the basics, to be able to see this stuff while it's happening and be able to hop out and look at a 5-minute and say, okay, this is what's going on. Excuse me. And so it's very important. It was very important for me, at least. When I started to understand these candles and how they structure and how they build around certain areas of support and resistance, it really helped me when I was a newer trader. It really did. And then over time, I started to incorporate additional things into my trading. And now I have this entire, what my wife likes to call, the NASA cockpit, because I have screens everywhere around here. They're surrounding me, above me, like they're everywhere. But you don't need that at first. It's a lot to pay attention to. But if you can't just look at a chart and say, oh, okay, that's what's happening around this area of resistance, I should be prepared, then, that's just gonna, you're just not gonna succeed, in my personal opinion. So anyway, that's, I think that's pretty much all I have today. So we'll have to see where everything else goes after this. We'll have to look at what happens when the futures open next or on Sunday night, and then we'll go from there. So this video is way longer than I planned on it to be, but again, it's Friday. So hope everybody has a great weekend. I will talk with it, or I'll see everybody then. And yeah, peace.